Don't you guys love it? Like the difference between the videos you've seen and thumbnails you've seen and titles you've seen today than you saw yesterday, right? Yesterday, the world was crumbling. The market was crashing. And today, is the market crash over? Is the correction happening right now? Are we going up again? Is it funny to anybody else? I don't know. It's funny to me. I wanted to make this video because I want to talk about the idea of trading during these crazy times. It's still possible. There's still potential money to be made right now, even if the whole market is bleeding. There's still going to be some winners in this kind of market. And today I found two of them. And I shared it with my Discord members, and a few people made a good amount of money on these trades. Okay, so I want to tell you about the two trades that I made today that I think were really, really good trades. One of them I was willing to hold really, really long term. One of them I just wanted to get a quick 5 or 10%, potentially a little bit more on. So I want to talk to you about those two trades and how I made the decision to buy these two companies versus some of the other stocks out there. Now, there were other positions that went up way more than these two positions, but my point in saying that is there's always opportunity out there in the market. You just, in these times, you have to be a little bit more selective and a little bit more patient with your positions, but you can make money in a bear market, in a bull market, in a market that hasn't even decided what it wants to be yet. You know, one of those markets that's like an angry teenager that doesn't want to smell bad, but yet they don't want to clean their room. You know, one of those. That's what the market is right now. So the first one I want to talk about is APXT. Okay, so APXT is a SPAC, and a lot of SPACs are right around their net asset value right now. Most SPACs have a net asset value, unless we're talking about PSTH, which is quite a bit higher than $10. A lot of SPACs have a net asset value of $10 per share. All that really means is, let's say, you know, a SPAC, it starts trading under $10 for some reason. Maybe the merger doesn't go through, whatever. You can redeem your shares, whatever you own, for the net asset value. Some SPACs are a little bit lower than $10. Some are higher. So it really depends. But APXT has a net asset value of $10 per share. Now, that means, based on this chart, today, APXT got down to $10.50 per share today. $10.50 per share. Now, I made a video the other day talking about SPACs having calculated downside, right? And how some of these SPACs may even have a guaranteed upside from here because they're at the bare minimum of their net asset value, okay? And now nothing in this market or any market is guaranteed by any means at all. But APXT, a SPAC, merging with a profitable company in the tech sector, okay, APXT is taking AvePoint public. AvePoint is the largest Microsoft 365 data solutions partner in the entire world. They have a massive amount of clients. They actually have positive cash flow. They have revenue, right? Like, this is a good company. And today, this SPAC dropped to $10.50 after seeing a high not that long ago of almost $18 per share. Now, how did I find this opportunity? Okay, so for me, I have a list of a couple hundred stocks that I go through on a daily basis. And I just scroll through them and I see some sort of breakout movements to the upside or the downside. Now, I like to look for companies that I believe in. I have this list of a couple hundred companies that I think will be good companies for the long haul, okay? And I look for momentum upwards or downwards. And usually I look for more momentum downwards so I can get a deal on some of these stocks, and that tends to work best for my strategy. Now, I was peeking through my list today, and I messaged everybody on my Discord. I said, is anybody even in the mood for some swing trades? And most resounding answer was no. Like, no, not at all. This market sucks right now. I'm just going to be honest, right? And I don't think it's over. I don't think the correction has corrected. I don't think it's over yet. Not quite yet. And I think we're going to keep getting into these modes where we're going up and down, okay? So I messaged everybody on my Discord. I'm like, is anybody even in the mood for a swing trade? And some people were like, I guess. Others were like, with what money, right? So there's such a dynamic range of people on the Discord. It's fantastic. If you're interested in joining, there'll be a link down in the description for the Patreon. You get access to the private Discord. It's pretty cool. So I messaged everyone about APXT and this other company that we're about to talk about. And I said, look, APXT bounced from here the other day. There's a chance it's going to do the same thing. Okay. So I had an average on APXT at $10.72 per share. Okay. About a couple hundred shares, thinking that, you know what? There's almost no way that this doesn't go back up at some point. Even if it takes a couple months, there's almost no chance that this isn't going to go back up. But what's been happening lately in the market, we'll see some sort of jump in the morning, followed by some sort of correction, followed by some sort of jump. We've seen these big like W patterns or V patterns in the market lately almost every day. The market can't decide whether it wants to go up and down, and that can play well for day traders and swing traders. Volatility tends to be a good thing if you're trying to time the market as best you can. But you can see, right, that I didn't time this perfectly. I bought, 22 cents higher than the bottom. Okay, so after I bought it, it fell more, right? And I didn't average into the position or anything like that. I bought in, and I was like, okay, there's almost no way this isn't going to go up. That's kind of how I felt, right? And today, it got to a high of $12.22 per share. I sold right at $12 per share my APXT, making a right around 12% profit, or a few $100s. So it ended up being a day trade, because any trade that you make in a day, right, buying and selling is considered a day trade. Anything over a day is considered a swing trade, technically. Okay, so this ended up being a good day trade. If I would have put more money in it, I would have made more money. I didn't want to risk a ton because there was potentially more downside, right? And I didn't know how long my money was going to be tied up. But the reason I picked out this trade to begin with, right, isn't just conviction. What I did is I looked back at the 6-month chart and I thought, you know what? When was the last time this was $10 per share? $10.50, $11. Okay. Since November. When this was announced, it shot up from $11 all the way up to like 17 within a couple days. Like, it was just right up. And then it traded and consolidated, and I did some swing trades in here on the stock a couple times, because, again, SPAC volatility is crazy. Now, this one hasn't even merged or anything like that, but what I did was I just looked back at history and I said, okay, when was this stock cheap? Since the merger announcement. Like, this hasn't been this low since the merger announcement. Now, with swing trades, that's the kind of thing I look for. I look for a big disconnect in the market versus where the stock price should be. Now, you can argue all day with maybe this could have gone down further or whatever. And yeah, you're right. And that's why I didn't put all of my life savings in APXT. But it may not have been a bad idea today. The second company that I purchased today, and this was purchased in my long-term portfolio because I really, really believe in this company long-term, is Open. Okay? O-P-E-N. Opendoor. If you're not familiar with what Opendoor is, this is a SPAC that was brought public via Chamath Palihapitiya. It was his second SPAC. IPOB changed into Opendoor, and very, very similar sort of price action, right? There's this major disconnect between the share price and where it potentially could be, This is a more long-term play for me. I didn't think we'd see $20 per share even again for Opendoor. This was another one that I said, hey, guys, keep your eyes on Opendoor. I'm probably going to be purchasing this in my long-term portfolio. This ended up being, from where I purchased it, a 22% profit at one point today already, and I think it's already a little bit higher than that. I bought in the $18 range. So very good swing trade / day trade potential for a company like Open today, but a great entry point for a long-term investment. Fantastic entry point for long-term investment. Now, again, when has this share price been this cheap? The end of October, beginning of November, back here, this share price hasn't been this cheap since way back then. Now, this could have fallen further, right? This could have kept going down, 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 down. That's why I purchased it in my long-term portfolio and not in my swing trade or short-term portfolio. But it could have been a really good swing trade or day trade today. Obviously, it didn't make sense to me that it was trading below $20. At one point, some of the people in the Discord got in the 17 something range today. It got down to 17.01 today. So you can see the massive jump it made from 17.01 all the way back up to $22 was where it closed. After hours, I think it dropped a little bit. Yeah, it just pulled up after hours here. 21.77 after hours, it dipped down. So that's how I like to find my swing trades / potential day trades, even long-term investments. Using these principles of I believe in both of these companies. Now, Opendoor is, I think, a company that's really going to disrupt the real estate industry. There's been some good press lately as well. They beat revenue expectations a little bit. In terms of news, they had a Wedbush article come out recently that said Opendoor Technologies iBuyers to gain significant market share over time. And that's kind of what I'm banking on with an investment like Opendoor, is that it should be worth a lot more than it's worth right now. Like 3, 4, 5, 6 years from now, I think this idea of these iBuyers like Opendoor and a company like Opendoor where they're creating more and more services around real estate, I really think this is going to be a great company long term. APXT, very, very similar in terms of my overall conviction for this company and AvePoint going forward. I don't think Microsoft is going anywhere, and therefore I don't think AvePoint is going anywhere. Again, they're the largest Microsoft 365 data solutions partner in the entire world. So, good companies, fundamentally and potentially disruptive companies like Opendoor can make really, really good swing trades because there's calculated risks there, right? There's only so far that they will likely fall before they recover. And I was banking on that we were at the bottom for some of these companies and these two companies specifically, and it ended up being a correct assumption. So, guys, that's kind of the gist of how I find my opportunities in the market. Let me know how you guys are feeling right now. Do you think the correction is over? Do you believe everybody else? I don't know. It's up to you to decide. Like I said, right now, I said this in yesterday's video, you have to decide whether you're an investor or not. Because if you don't think the market's going to recover, right? If yesterday you didn't feel like the market was ever going to recover, you got to get that mindset out of your head, honestly, right? Like history will continue to repeat itself. And aside from a cataclysmic event that just halts the stock market, period, I don't see the market not recovering at some point, right? I don't know. Maybe you disagree. Maybe you feel like you just want to curl up in a ball and go to sleep, hibernate for a while. A lot of people feel that way. But I think you'll wake up from hibernation in 6 months and go, probably shouldn't have hibernated. So just my thought, just my 2 cents, 10 cents, 12 cents, 22% on Opendoor. I'm just kidding. Guys, thank you so much for joining me for another video. I appreciate you. If you want to be a part of the private Discord, consider joining. It's patreon.com/I'm Richard Allen. I would love to have you over there. It's been a great place for just us to communicate and try not to panic sell, which I've encouraged people not to do. Again, not financial advice, just encouraging banter. As always, thank you so much for joining me for another video. If you didn't already do it, click that beautiful red subscribe button down below, and I'll see you in the next video. Thanks.